Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Chile's vaunted copper industry is nearing a tipping point as coronavirus explodes across the South American nation, mine workers and analysts say, laying bare the hidden costs of policies that have until now salvaged its output of the red metal. Since early April, leading miners, including state-owned Codelco, BHP, Anglo American, Glencore and Antofagasta, have doubled down with skeleton crews in the world's largest copper producer, churning out more amid the pandemic than the year before. But cracks are beginning to show, union leaders told Reuters. Patricio Elgueta, president of Chile's Federation of Copper Workers, an umbrella group for Codelco's unions, said miners are exhausted and scared of falling ill but keep working to make ends meet. Elgueta said unions were weighing a proposal from a regional roundtable of health workers, politicians and social groups to draw down production to at minimum at all of the mines around the hard-hit city of Calama in order to sanitize them. Meanwhile, Elgueta said emphasis at the major mines had necessarily shifted to processing ore as companies have scaled back staffing by around 40%. Contract work has already largely been slashed.
Moving on to the top news in the energy sector.
The strike at Coal India Limited cut production by 56% in the 3 days ending July 4, as workers oppose opening up coal mining to the private sector, a senior company official told Reuters. The world's largest coal miner's production fell to 573,000 tons per day over the 3 days, compared with a June average output of 1.29 million tons per day. Offtake by customers, such as power generators, fell nearly 62% to an average of about 536,000 tons per day, the official said.
We will now look at the top news in the agricultural sector.
Russia aims to use permanently the grain export quota mechanism it introduced in April to June in response to the COVID-19 pandemic, TASS news agency reported, citing Agriculture Minister Dmitry Patrushev. Russia, the world's biggest wheat exporter, has said that its grain exports will not be subject to any quotas from July to December, but quotas are possible from January to June next year to secure enough domestic supply. The first half of the 2020-21 season, July to December, is still expected to be quota-free, Patrushev said in an interview with TASS. The ministry expects Russia to export 45 million tons of grain, including 35 million tons of wheat, in the 2020-21 marketing season that started on July 1, TASS added. It sees the 2020 grain crop at 122.5 million tons, including 75 million tons of wheat.
Next we have agricultural price moves.
U.S. corn and soybeans rose more than 1% on Monday as hot and dry weather forecast in the U.S. Midwest added to doubts about harvest prospects following last week's lower-than-expected government planting estimates. Wheat was steady, underpinned by corn and soybeans, as traders awaited a clearer picture of harvesting in the Northern Hemisphere, including in top exporter Russia. The most active soybean futures on the Chicago Board of Trade reached their highest since March 5 at $9.09 minus 1/4 a bushel, and by 10:17 GMT were up 1.3% at $9.08 minus 1/4. CBOT corn was up 1.1% at $3.57 minus 1/2 a bushel, but held below last week's high of $3.63. CBOT wheat was up 0.3% at $4.93 minus 1/2 a bushel.
We will now take a look at energy price moves.
U.S. natural gas futures jumped to a 2-month high on Monday on forecasts calling for warmer weather and higher air conditioning demand over the next 2 weeks than previously expected. That price move comes despite rising output, coronavirus demand destruction, swelling stockpiles and a collapse in liquefied natural gas exports to their lowest since 2018. Front-month gas futures rose 7.6 cents, or 4.4%, to $1.810 per million British thermal units at 13:32 GMT. That is the highest since May 7 and is up around 30% from a near 25-year low of $1.432 hit about a week ago.
Oil prices were mixed on Monday, with Brent crude edging higher on tighter supplies and positive economic data, while U.S. benchmark WTI futures dropped on concern that a spike in coronavirus cases could curb fuel demand in the United States. Brent crude was up 6 cents, or 0.1%, at $42.86 per barrel by 1340 GMT. U.S. West Texas Intermediate crude was down 40 cents, or 1%, at $40.25.
Moving on to metal price moves.
Copper prices climbed on Monday towards 5-month highs hit last week on growing optimism about demand in top consumer China and concerns about the spread of COVID-19 in Chile, the world's largest producer. Benchmark copper on the London Metal Exchange traded up 1.5% at $6,105 a ton in official rings. Prices of the metal used widely in the power and construction industries touched $6,120 a ton last week, the highest since January 22.
On to a most recent news on the financial market.
The yuan led commodity currencies higher against the dollar on Monday as investors lapped up risky assets on growing expectations of a strong Chinese economic rebound, and the United States continued to report a surge in coronavirus infections. An index of blue-chip Chinese shares soared to its highest in 5 years as traders bet on a revival in China, pushing the yuan to its highest level since March 18 against the dollar. A revival in Chinese economic activity bodes well for Australia and Europe, who count Beijing as their biggest trading partner. The euro rose 0.5% to $1.1303 to a 2-week high, also supported by strong data. The Australian dollar rose 0.3% to $0.6970 following a 1.2% gain last week, with the market focused on a Reserve Bank of Australia policy meeting on Tuesday. Against a basket of currencies, the dollar edged 0.3% down to 96.87, its lowest level since July, 2. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.